Hi everyone, this is Christine Kopr from Sotheby's Realty in Vancouver, BC, Canada, giving you your September market update. So we're going to take a look and see what happened in the month of August. We all thought everyone was going to take a break, which I think many of us did. However, sales actually remained strong. Most people will tell you it was crickets during the summer. However, sales activity really hung in there, but what didn't was any new listing inventory, and that has been the name of the game. I don't care what politician tells you, supply, supply, supply. It's demand and supply, and it has a massive impact on the real estate market. And if the demand is there, you need the supply. So let's take a look at these numbers. I'm going to share my favorite graph with you, and we're going to walk through it. And I've got some additional sub-market content at the end, focusing on detached on the west side, as well as one other sub-market. So make sure you hang in there and check that out. So this is an excellent graph because months of inventory is the number one way to tell you what's happening in a market, because it's telling you demand. And very quickly, you know where we're at. 4 months and below of inventory over a sustained period is a seller's market. Over 6 months of inventory over a sustained period is a buyer's market, okay? So 4 months and below, sellers, 6 months and above, buyer's market, in between, balanced. So we're going to take a look at 2020, but specifically in August. We had 3,152 sales in the month of August. Okay, that is up 3.4% month year over year. It's down slightly, just 5% month over month, and it's up 20% over the 10-year average. So that gives you an idea of what's going on in this marketplace. You don't want to compare it to last year because we're in the middle of COVID, but you want to know over the long-term period, where are we in the scheme of things? And sales are high for this month for the 10-year average. New listings. Okay, so we had 4,032 new listings come on in the month of August. That's nothing. This is what we were plagued with earlier in the year prior to the market going bananas because we had low inventory. So for new listings, 4,000, that's down 30% year over year, as well as it's down 8% month over month in terms of new listings. I have a feeling people were just so sick and tired of COVID. The doors opened for summer and we were free and we were out of there, and no one was really thinking about listing their home on the market during the summertime. So the amount of sales that happened and the new listings with the existing inventory, we have 9,000 active listings on the market in August. Compared to the trend of this year, we're heading towards what happened prior to March and April when the market went bananas. So we're still in low listing inventory. So there's not a lot of inventory out there and available for buyers, and that is keeping a cap on prices, or supporting prices in this marketplace, as sales, as you can see, have leveled off from the spring. Obviously, inventory is going to be a massive player as we come into the fall here, and if we get a slew of inventory in the market, that's going to impact how things look. Now, based on the amount of sales, so how it works is how many listings we have. We have 9,000 listings in August. If we sold 3,100 homes like we did in August every month for the next so many months, how many months would it take to sell through all of our inventory if no one else listed a home? Well, that's 2.9 months. In literally 3 months, we could sell all the homes in Vancouver if no one listed and every buyer purchased a home that was out there as there was in August. So that's still a very compelling sign for the market here. It's a strong seller's market with some shifts, okay? We are definitely starting to see a stabilization and a return more back to normalcy, but what's lovely is there's more of a stabilization depending on your sub-market. Your benchmark price is sitting at 1.77. So that is up 13% year over year. So benchmark wise, double digits. And in fact, almost across all categories, when we're breaking down, we're seeing double digit year over year increases in price. Month over month, it's only 0.1%. So it's basically the same from July to August. So please keep in mind, most of the price gains happened back in March and April, so earlier this year. So here we are in terms of the overall market conditions for the Greater Vancouver marketplace. We're still sitting in a low inventory market. Prices are stabilizing. However, you need to get into your specific market to know more about what's going on there. And if you tune in just a little bit longer, I'm going to get into that. I'm going to quickly do a breakdown of the different asset classes for the broad market as well. So detached in August, we had 945 sales. That's down almost 14% in terms of sales year over year. Your benchmark price for a detached home in Vancouver is now $1.8 million. That's up 20% year over year, 20%, and up 0.3% month over month. So it was stable between July and August. Townhomes, we did 576 sales in August. That's up or down 7% year over year. We are at a benchmark price of $952,000 for a townhome. That's up 16.5% year over year and 0.3% month over month. So again, another double-digit year over year return on anyone who bought a townhome in the last year. Condos, we did 1,631 sales. That's up to 22% year over year, and we are sitting at $735,000 for a benchmark condo in the Greater Vancouver. That's up 7.6%, so almost 8% year over year, getting close to 10% return, and up 0.2% month over month. So if you've been in the game, you've been doing quite well. If you're getting into the market, it is a market that you need some expert advice in how to navigate. There are different ways of approaching this marketplace. However, there is a shift, and so every market segment's going to be a little bit different. And I just wanted to pull up my screen and show you that in regards to two submarkets in the detached market. Okay, here we go. Let's take a look at these submarkets for the detached market. All right, here we are. We have two graphs. I just quickly made this for you guys. So we have detached houses on the west side. We have detached houses on the east side. And I wanted to share a little bit about how much things have changed from the spring until today, and how things, you have to pay attention to certain numbers so that you know exactly what's going on in your target marketplace and how to navigate appropriately. So detached houses on the west side in April, you had a total of 661 listings. Today in August, we're sitting at 741. So we've increased our listings. Sales went from 140 sales back in April, and they've trended down to 75 sales. Your average days on market went from 30 days on market. Now we're going up to 48. So you can see that technically there's been a bit more inventory that's come on. There's been slightly less sales, and so therefore the sales process and the sales activity is coming off, and we're actually starting to get into a buyer's market. And you can see that here, months of inventory, just based on these numbers, 743 homes divided by the 75 sales that took place in August, puts us at 9.9 months of inventory, with 6 months of inventory and above being indicative of a buyer's market. And the same thing is reflected in the sales to actives ratio. How many sales are there and how many active listings? 12% and below is considered a buyer's market. And you can start to see that this is affecting the benchmark price. You can see how the benchmark price has gone up since April, from 3.363 to 3.4 and the year over change date. But with some of these changes, we're probably going to see, and you can see it here, July, we trended down about $4,000 in the benchmark price between July and August as things are stabilizing. So if we don't get a flood of inventory on in the market here in September, things are looking really good coming into the fall. There's other factors, of course. We've got an election, we've got interest rates, and we can get into that. But let's take a look at what's happening on the east side market. So east side, back in April, we had 654 homes on the market. July trended down, and now there's even less listings versus the opposite on the west side, where we trended up, having more inventory. April, 222 homes sold. down to 102 in August. That's half. And you can see in July we were at basically 150 sales, and now we're down to 100 sales. Average days on market have trickled up from July, which are up from April, which used to be 15 days on market, and now we're almost at 40. Your sales to active ratio has gone from a super strong seller's market down just to a seller's market and hovering in the balanced market territory towards the seller's end of the territory. And you can see that we went from 3 months of supply to a balanced market of 4.5, or closer to a seller's market, and are hovering at about 5.5 months of inventory on the east side. So we're starting to see that balanced market here, and it's reflected in the sales and months of inventory. So there's definitely a stabilization coming here too. You can see we went from 1.681 to 1.692, and now we've come off slightly to 1.689. And to be honest, this is refreshing, and I think it's going to put a nice floor into the marketplace across the board. Benchmark price, double-digit returns, most of which occurred earlier in the spring. So you can see the tale of two sides, the west side versus the east side, both acting very differently. One is in a buyer's market territory, and the other is in a balanced territory, still towards a seller's market. And then I decided to take a look at Port Moody. Excuse the formatting here. So April, we had 84 listings, trended down to 71. And down to 69. So inventory has been reduced for detached homes in Port Moody. Sales went from 30, 21, and 18. So you can see this is back in April, and then the last couple of months here, the summer, our sales are starting to soften. Listings came down a little bit, but as you can see, we have there's still a very strong trend here in terms of being a seller's market. We're a very high seller's market back in April at almost 36%. In terms of your sales to active listings, how much is selling through. And then here we're still sitting at 26. So it's 2.6 out of 10 homes is selling in the marketplace. In terms of months of supply, we're still very much in a seller's territory. There is very, very limited supply. Your benchmark price went from 1.814 in the spring to a peak of 1.863, and now we're just off a little bit to 1.855. And the year-over-year change is about the same in your high 20% return year-over-year, almost 30% year-over-year gains in that marketplace. So as you can see, each market is operating very differently. You need to get that specific information, particularly if you're considering selling this fall, which I think is going to still be an excellent opportunity for anybody that is considering making a change right now. And of course, as always, you need to have the right skills and the right tools when you're placing offers to purchase your new home. We've got a few things coming down the pipeline, which all are going to have an impact on the market. Everything from the federal election to housing policies, supply. Thank you very much. There's other things that are going to come out, foreign buyers tax and all that jazz. We've already experienced this, or a ban on foreign buyers. They make up a very, very small percentage of the marketplace. So I personally don't see that being a massive impact, and particularly not in the sub $3 million market. We've got the vaccine, the Vax Pass, and of course the new Delta and Mu variants. And these are a couple of things that could actually have an impact on the market if sellers start to get concerned about having people coming through their homes. We may not see the inventory, and therefore it could be even better time to be selling. We'll just make it a harder time if you're buying. Low interest rates are also a big part of this. They're creating a floor in this marketplace. We still have historically low interest rates, albeit there is pressure on the fixed term rates. We already saw that the bond market impacts your fixed terms rate, and we see that that's already happened in the pricing for a 5-year fix, one of which you could get at 2.19 today, and back 6 months ago you could get 1.75 for a 5-year fix. Variable, the great news is that the Bank of Canada came out and said they are keeping the prime rate stable. They're not making any changes. And I think with some of the negative news in the economy outside the inflation, we haven't performed as well as we thought we were going to earlier this year. they're going to have to keep the prime rate pinned to the floor. And with this COVID thing, I mean, it's definitely not going, we're not getting through it as fast as we would have hoped. And that's obviously impacting the market in terms of employment and in terms of shipping and construction and everything like that. So I think they're going to have to keep interest rates where they are. So if you are willing to take a gamble and go variable, you can still pick up rates at 1.55%. So that's a big market update for you guys. I hope you found that really valuable, and I really look forward to reconnecting with you. Call, text, email, reach out to us. We look forward to it. And please send us any questions that you have or contact us so that we can discuss them with you. With that, take care and be safe.